Ira Epstein with your financial market wrap-up for this Wednesday, and this is April 8th, 2020, just before 3:30 p.m. Central Time. This will be the settlement prices in the different indices. They will reopen in a minute or two here. The dollar up today, the metal market's down. If you read the Fed comments today, and most of you probably didn't get a chance, they give two scenarios. One where the market does pick up in the second half of the year, and the other that due to the virus, it's not this year, it's 2021. But they didn't give a real solid picture of inflation pickup, and it was sort of, they're protecting the economy, and that's why they're acting the way they are. We understand that. In the energy sector, OPEC meets tomorrow. Russia apparently has agreed to a 1.6 million barrel a day cut, but I don't know the caveat with it. I don't know if the U.S. has to join in or not join in. We're going to find all that out tomorrow. And as you can see in the notes and the bonds, a drift to the downside. So when I look at the S&P, we're continuing with this bounce area. Okay, that makes sense. You know, you've come from 3381 to 2437, and you're back to 2700. Okay. It's not dramatic in any fashion, but it's a nice bounce. When we come to the daily bar chart, you've been fighting at this 38% area of a correction. Are you going to go to the 50%? You could. You can go to 62, but you did what I wanted the other day. The market fell back. You had that Tuesday reversal where you didn't go anywhere, and today you came up to check out Tuesday's highs. That does not mean you can't go higher. Don't go down that road. It also doesn't mean that this rally is no more than a bear market rally within the bigger bear market. We'll find that out. As we take a look at what the swing line's done, the swing line has not been helpful in telling us if we're trending. We have a pattern of a lower low and a higher high with tremendous volatility, 900-point moves every day, which makes trading very difficult. If the market were to pick up and run and clear this 2750, some traders will say, well, the next resistance, I'd be one of them, could be the 200-day average or the 100. That certainly be in the, if we come back on the charts, let's see if we can do that here. These numbers here are the 2931 level, so you're even above that to get to those numbers. So that's one set of numbers they could look at. Your IT resistance, you're at it right now. Take a look at the Bollinger Band. That is where markets fight battles. 18-day average Bollinger Bands. Would I ever tell a client to go long over a Bollinger Band? Let me explain the word N-E-V-E-R. No. So even if you popped above it, if you're over that Bollinger Band, I want no part of it. I think this is an area that is fraught with danger. When I take a look at momentum to see if I'm on to something, I see it. The market's overbought. Both numbers are not trying to stay over 80. You got to get the blue over 80, and then you got to keep them there for several days to say, the market has converted, and under that Bollinger Band, you're buying, looking for the higher prices till that gives ground. If you take a look, you had the flip-flop of that right here. When you were coming down, you had the embedded reading, and when you finally lost it right here on this day, that was March 25th, when the market was 2467, you also broke through this high. That was the time to be out of shorts. It was, as far as I can see, there's nothing bullish on that. Let's see if we can come through this. Here we go. You go to the 18-day average and you stall, the line in the sand story. And as you can see, what the market's done is it's fighting its battle right there. I'm not surprised at any of that. It's the same story in the NASDAQ. You're fighting at the 200-day average of closes and the upper Bollinger Band. Again, I would not have people buy over that. At least this particular chart threw out buy signals when it was higher lows, higher highs over the 18-day average. And I can make a story as to why it got there. In the Dow, you've got, similar to the S&P, a lower low, higher high. I'm not enamored with this. I'm not enamored with getting long into over a Bollinger Band in an overbought condition. In the Russell, we've been looking to see, can it get up and join the party of hitting the Bollinger Band? Just missed it. It's 1197.30 is the high so far. 1199.50 is the number. Maybe when it reopens now, it'll do something more interesting, but haven't seen that just yet. As we come in on the cash VIX, you can see how the market is slipping still. You've developed a bearish embedded reading. So if we look at this, both numbers under 20, under 20, under 20, under 20. So it did it yesterday, and the market is still paying back by slipping down. Could go to that lower Bollinger Band, which would still be bullish the stock market. You need the two to flip-flop. If you're going to get bearish stocks, bullish that number. Hasn't happened. You're fighting a battle at that line in the sand in the bonds. Now, if this market gets under 177.28, it will turn bearish. You're already doing that in momentum. So momentum's leading the market. You'd have lower highs, lower lows, and the question is, how far could that market fall? But I do think the bears will come out of the woodwork if you get under 177.28. In the 10-year notes, they might try it if you get under 137.16, as you can see. That would give them the lower highs, lower lows, momentum down under the 18-day average of closes. In the dollar index, I still see the battle at the 18-day average of closes. In the euro currency, I can see where the market's just fighting right here at that 18-day. And as I pointed out yesterday to you, you have a pattern of higher lows, lower highs. Now, with today's pullback, if you got over 109.52, I think the bulls would come out of the woodwork. I think they buy the market, stops under today's lows, and see if they can get the market rocking and rolling to the upside. In the yen, there's nothing here. This is a market so far that's just sort of drifting. The bears might hit the market if you take out today's lows tomorrow, because they could then early on argue lower highs, and you already have the lower low. So that's the what-if scenarios on that. In Bitcoin, in the June Bitcoin, I'm looking at a market that is still overbought, trying to work higher now. Both numbers today in the slow stochastic are over 80. They were over 80 yesterday as well, not the day before. If they embed, then I think the market even adds more strength from this level. In terms of the Brent versus WTI crude, you can see the volatility here in it. You tried to pick up, now you've fallen back, which means Brent is losing to WTI today. And you can see in the Brent, you're up 167 points, overbought going into the OPEC meeting. Trend up. Resistance 34.72. WTI crude, trend up, overbought. Resistance 31.76. Rebob gasoline, overbought, trend up, resistance 80.73. So you can see what you've got going in, and tomorrow's going to be an interesting day. As for the nat gas, now you don't buy Bollinger tops, you come out against them of longs if you're long, and I didn't see a long position there. I see a market that just moved rather dramatically, hoping that something comes next week probably out of the Texas Railroad Commission deciding maybe they will be able to stop the Permian Basin from producing as much. They act like an OPEC down there, and that's 40% of our country's oil comes from Texas. Well, less flaring, less problems, less natural gas, try to get the market back into supply-demand that makes sense. Plus, it's going to get warmer soon. It is April 8th. It's not May, it's April. Want to remind everyone, tonight begins Passover. Happy Passover. We've got Good Friday on Friday, so you're not going to have trading on Friday. Then we have Easter coming. So a lot of risk over a 3-day period that you have to pretty much set your position, what you want to do. Globex trading, to the best of my knowledge, does not exist on Friday, so the markets come to a grinding halt one of those few times. Want to remind you, our market research, it's always something to look at, especially if you like to get up in the morning and see my morning subscriber videos. They tie hand in hand. So if you go to our free offerings, you'll be able to put together a neat little research package for yourself and see what that's about. If you're a Spider ETF trader, well, this is all there for you right at the end of the day as well. I'm Ira Epstein. You have a good day, and I will talk to you all tomorrow. Take care.